Welcome to my morning report on Tuesday, the 12th of January, with me, Rich Perry, market analyst at Handtech Markets. The European trading session is a bit stable, actually. It's taken a positivity, or the positivity out of any moves in Wall Street overnight. Wall Street basically closed into the end of trading last night, and European trading has sort of taken a bit of support off the back of that. There's also been the latest fixing of the yuan midpoint is come basically flat by the PBOC, so that's helped to support a bit of sentiment as well. Let me just show you how the yuan has moved in the last couple of days. The yuan has dropped back. There was a sharp sort of decline that we saw on Friday in the sort of response ultimately to a slight increase in the yuan midpoint fixing, and holding up steady again today. That's been helped by the PBOC action, so that's helped to steady market sentiment. And what we are seeing is pretty mixed moves actually on markets across the economic. Get my words out. Across the equity indices, you have a bit of support, but interesting that we're not actually seeing that across the forex markets. Still a bit of a flight into sort of safer haven side of trading, where with the euro and the yen performing solidly. Also, the commodity pairs not performing so well. In terms of treasuries, basically flat, aren't they? Slightly up on the 10-year, and not doing it too much either on the 2-year. So it's basically really the forex markets that are showing really the pressure to the downside, and that is coming as this oil price continues to slide ever lower. The 30 psychological key support level, I suppose you'd say, is now under increasing threat. It's been sliding basically throughout the course of 2016, and it doesn't really look as though it's going to stop anytime soon. Incredibly weak on that oil price, 2.5% as I speak on WTI crude, lower today, and it just doesn't really show any signs of solid or support or any strengthening or anything like that. So it's a real sort of drain on the sentiment. But just as we speak, just slightly supported in these markets. But again, I don't really imagine we're going to get too much upside until we get a nice sort of element of support to oil. So what have we got to look forward to today? Well, again, it's a fairly quiet day. We've got the UK industrial production at 9:30, forecast to come in line with last month at 1.7% on the year-on-year data. So that's not going to do a great deal to drive any real sentiment throughout the day. My chance of the day today is the dollar Swiss rate, and I find dollar Swiss very interesting because it's been, if I zoom out, it's been in this uptrend channel basically for 7-8 months, and it's now forming a sharper uptrend with these recent lows of August, October, and December. And again, yesterday that hit the low and bounced off the support of the uptrend channel. So that is continuing. In the recent sort of sequence of higher lows in the past month or so, the RSI is agreeing with that move. Stochastics were falling yesterday. They started to sort of turn up a bit again. So I would say that any sort of weakness in this chart is a chance to buy. And I think that the weakness that we've got today could well be that case in point. I'm interested in this 89-day moving average actually, which has been catching the lows pretty successfully over the past month. That currently comes in at 98.82, which is pretty much bang on the low of yesterday and the uptrend channel. So, the uptrend support. So you've got some good underlying support seems to be on the near-term basis on this chart. So good support to be used in any sort of weakness that we're seeing on this dollar Swissy, which is exactly what we've got today, about 40-50 pips down on the day. Could provide you that little bit of a buying opportunity today. So it's looking pretty strong, and I think ultimately we're going to retest this reaction higher that we saw in early January, 101.26 area, and ultimately you could likely to see the continuation as things stand of this big uptrend channel. Now, in terms of the intraday chart, you'd certainly say that around 99.20 there's an element of support. having provided the lows through January. Bit of a spike low, but that was yesterday, 98.77. But it certainly would seem that around 99.20 there is an element of support. So if you get it back towards there, that could be your opportunity today for further upside within this uptrend. So I wish you good luck in your trading on dollar Swissy today, and I will speak to you later.